Hello, everyone. Welcome back to the channel. It's Matt with Green Bar Trading. I am exhausted today, to say the least. I had my ice hockey game last night. The only time we can play is like in the middle of the night. So while I got very little sleep, and I'm going to be working all day today at my business, I'm not going to be able to actively day trade. That's why I wanted to make this video now. Update you guys on a position that I took, a little swing type of position, why I took it, and my trade plan with this position, where I'm going to stop out, where I will take profit. So let me share my screen with you guys. Sharing the screen. So this is what I decided to get into. Now, SQQQ is the triple leveraged inverse of the NASDAQ market. So QQQ is the NASDAQ market. You put an S in front of that, and that's the short version of it. So this will go up if tech goes down. Now, the reason why I got involved in this position, because I am a technical trader. The macros, the fundamentals, yes, they play a part, don't get me wrong, but with the valuations already so high, they kind of go out the window a little bit, just a little bit, not really totally out the window, but I like to trade on technicals because they obviously have a very clear area. So looking back at the last week and a half of trading, the NASDAQ market, I'll show you with the Qs, actually /NQ. Okay. The last couple weeks, we have traded in a very tight range. All right. Now, when you trade in a tight range like this, it's very important at which way it breaks. Let me see if I could get a longer time period. Okay, see, these are all-time highs up here. This is what we're dialed into here. This is the last, I would say, about 3 weeks of trading. Now, let's go back. Let's go back about a month. Yeah, so this is about a month. Right here, okay, after the bounce off of the trend line, which is the ascending trend line for the tech market, it has been for a long time, okay? It bounced, 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 bounced. After every correction, it bounces off of this key trend line. Now, what we didn't do here yet, anyway, is we have almost a double top hanging over us here. We did make higher highs, and we, by a little bit. So that is a good sign to continue the trend higher, which would be against my position. But this is key. Now, if we dial in here, when you get so we had the bounce, when you get a tight consolidation here for about a week and a half, what you would have liked to see if you're long tech is you would have liked to see the break up through resistance after the recoil, right? Instead of the hard break down through support, which is what should have been support. When you get a break of a level like this, for me, it tells me that maybe we're not ready yet to go to all-time highs, and maybe we need to correct a little bit. And that's why I got into a short position. Now, I have very clear areas of where I'm going to get out and where I'll take profit. Now, looking at the QQQ, the area of interest for me today, Monday, Tuesday, whenever I decide this position, is going to be this area here, 33195. So what was previous support turned into resistance. And if this level, from my position, I'm only talking about my short position, if this level breaks to the upside, that's when I cut my position and I get stopped out. Now, the stop out on that will coincide with this area right here, 1130 to 11, basically 1115-ish will be where I stop out of this position. While the trade would still be decent as long as it holds over 11, look at where this has come from. This is just the 180 day. It was at 30 back in October. It is traded all the way down because the tech market has gone nothing but up. Look at where this thing was back here. 427 has sold all the way down to 1044. So obviously the tech market has just been killing it and the short has been down. Now, if we start to dial in, looking at last year, it was at 163. Dial in a little more. The start of this year was, around 16 or 17. So this is really has sold off quite dramatically. Now, these are the levels that I'm looking at. And, like I said, my take profit. Now, when we broke, we actually finally made a higher high here. So we were in this consolidation. We broke to the upside. So now 1164 was our previous high. A take profit could either be up here, or what I'm going to do is I'm going to wait until the 1185s, or maybe depending on the price action, even past that if we can break that. So that's my take profits are going to be up here. My stop outs are going to be tight, probably about 1120, 1115. So that's my trade plan. That's the reason why I am short, because of this breakdown. This is a key area that broke. It got retested and broke again. So this is going to be a key area. The key area holds up, my trade's still valid. If it breaks and then holds on a retest, then I cut the trade. This is a trade plan. While it's not always going to be right, obviously, as long as I'm 60 to 70% accurate in my trades, that's all you can do. You're not going to be right 100% of the time. Have a detailed trade plan and know where you're going to stop and where your take profit is, what you're willing to risk on a swing trade and a day trade is very important. And you have to know how much you're willing to lose on a trade. Every trade you go into, you have to have a very specific amount that you are going to stop out at. If you go into a trade without that, I just do not recommend that at all. Always have a plan. So anyway, guys, that's it for me. We're heading into the weekend, so we can expect a nice weekend video for the week ahead outlook. Always great videos. This week we killed it on some of these, Carnival, American Airlines, some of these stocks from last video did really well. So it was good to see. I hope everybody has a great weekend, and I will see you guys all on the next video. Take care.